From the floor of the CME Group, this is Danny Riley on this Tuesday, March 9th. You know what? The markets are acting great here, and the slower it gets, the more it's favoring the upside. And this is really the way it's working right now. You know, back a year ago, the markets were in a panic, and on this day, the markets recovered. And actually, this desk actually put out an equity report that said the day before that they thought we were getting close to a bottom. Who would have known that the market would have gone up as much as it has without any kind of pullbacks? What we're going to do today, we're going to go over a couple of statistics that we think are prevalent with what's going on in the S&P right now. From the March 9th low of last year, the S&P is up 68.3%. The Dow is up 61.2%, and the NASDAQ comp is up 83.8%. The sectors in the S&P that are the S&P sectors, the financials are up 144.8%. The consumer discretionary is up 99.3%. The industrials are up 94.4%. Materials are up 83.8%, and last but not least, the techs are up 83.2%. You know, these are amazing statistics, and the fact that the market has not come back down is it's just too hard to fathom. You know what? Everybody was looking for some type of pullback going into March. So far, we haven't seen it. In fact, we're just off the contract highs right now. Above where we're at right now, above the way the stop levels work right here, they started about 1139 up to 1143. 1142 half is the high of the day right now. So once we get above that 83, the markets are going to start to, once we get above the 4380 level, the markets will start to go toward those higher stops. Now the bigger stops are above where the old high was. 1148.70 up to 1153 even, and this is where we think the markets are going. Above there, we still have that old 1180, 1185 level, and then the 1301 level, which is a level that we've actually been pointing out on the equity report for a while. You know, but the bottom line here, ladies and gentlemen, is we're into the roll. The markets are quiet. If you take out the spread volume out of the big S&P, we're sitting at 5,000 big contracts for the pit. That's not a lot of food for these guys in there. In fact, the pit seems to be getting a little smaller as we go forward. We've lost a lot of locals. As far as the minis go, we had 160,000 minis traded before the open, and I think right now, if you take the 160 out, we've got about 770,000 minis traded in the day session. Remember, everybody, we were doing 2 million minis a day here about 2 or 3 months ago. Now it's under 1 million minis a day. For the remainder of the day, we don't want to fight City Hall. You know what? When it's this slow and the markets gravitate like they are, there's no reason to get in the front of this. Just let the thing do what it's going to do. We do think that we are going to see another push up late in the day. We also have heard that there's a tech buy program floating around somewhere out there. It's a West Coast firm that's doing it. We don't know if it's for real or not, but I'll tell you what, the tech stock and the NASDAQ acts great. As far as the rest of the day is concerned, we think we're in for more of the same, a little bit more drifting, higher type price action, but other than that, that's all we got to say from here for the day. We'll see you tomorrow with more Mr. Top Step updates.